Hey everybody, this is Richard, and today I'll be doing the trade review video for the last 2 weeks of trades. It's going to be a pretty quick video though, because we really only had one trade. We had a day trade. Now, for those of you that are newer to the system, just remember that it's pretty rare that we have so few trades. In other words, in a 2-week period that we would only have one trade. It's really rare that that happens. The reason why it's been happening though is because the market has really been selling off since January. You've had a few moments where the market has popped and we've been able to take advantage of that when it happens, like you saw here in March. But let me kind of go over what these charts are. I think you all probably know because you watch the videos, but this top chart is the bullish put spread component of the algorithm. And if I zoom in, so every candle, every day has 2 candles. So if we go back, this is the review for the 27th through the 8th, which is 2 weeks. So that's this period in here. And notice how the market sold off for a week and then rallied for a week. But overall, the market has been starting to stabilize really since kind of mid-June. And so if that continues, which it looks like it could, then for sure we will start getting into more of these bullish put spreads. But remember, these are trades that are expecting a bullish move. And so we only want to do it if we think the market is going to go higher. If I zoom out, and then I can show you what I mean. When the market is trending higher, like it was all throughout this period, we end up having a lot of these put spreads, and this algorithm tends to do really good. So the fact that it's on the sideline is actually really good. That means that we're avoiding losses for the most part. Now, yeah, it would have been nice to have a few trades as it rallied in here, but it's okay that it didn't. It's only looking for the high probability trades. And I believe that next week, as early as Monday, actually, we could start seeing these trigger again. In fact, Monday, there's a decent chance that we'll see a trade. So you can be on the lookout for that. As far as the other algorithms go, this bottom left one is the day trade long. And this is the one that we really only had the one trade. But let me pull up the graphic and I'll show you the summary of what we did. Okay, so here's a summary of how the Geronimo Trading System did for the last 2 weeks. So we didn't have any put spread trades, but we only had one day trade. It was a day trade long that triggered, and it was a loss of about $381, which is about a 2.5% loss. So that's how we did for this week. We had a loss of about 2.5%, for the last 2 weeks. And just keep in mind that past performance is not indicative of future performance. Trading futures does involve substantial risk of loss. It's not appropriate for all investors. But those of you that are watching this, most of you are probably already customers of mine, and so you're already aware of the risks. But if we go back to the chart, again, the last 2 weeks, we didn't have any put spreads. We only had one day trade, and it was actually on Monday. So if you remember last week, or 2 weeks ago, we had a couple really good day trades, this one here, and then this one over here. Well, I guess it was Tuesday, the day trade long got in again, and of course we're always optimistic when it triggers that we'll have a really good trade, but in this case it didn't. You had a gap up and it kind of held that for the first 18 minutes. We ended up getting in and then we took a small stop. Now the good thing though is that notice our stop was really only about 7 points, and with slippage it ended up being about a $380 loss. But notice what happened the rest of the day. The market just steadily sold off. So the fact that we got stopped out, in that case, the algorithm did do the right thing by getting out. It's always painful when we get out and then the market rallies. So to see the market sell off, even though we took a loss, it was well worth the risk, because as you know, these trades can turn into pretty huge trades. I mean, this one here, you can watch the previous video, but it was a really nice trade that we had. And so risking, $300 or $400 on these trades to have a shot at making a couple thousand on a trade is definitely a good risk reward trade-off there. But this one will have losing trades, as you know. But when we lose, we tend to lose pretty small because we have a tight stop. And when we win, we tend to win pretty good. Now the day trade short didn't have any trades. And that's good. It came close to triggering on the 30th of June, but it didn't. And that's good because we would have got stopped out. It came close again on the 5th of July, but again, it didn't. And again, that's good because it would have got stopped out. So it did the right thing. Now, it would have been nice to obviously trigger on this day, but it's not looking at any kind of reversal. It's shorting into weakness is how that short algorithm works. But for those of you that are new, I believe that this coming week, as early as Monday, we'll start seeing these spread trades occur again. And that's something that anyone that started this year kind of after April, They're not really aware of how those work because you haven't really seen any. We've only had one. But again, that's good because the market's been selling off. This is the put spreads are looking for a bullish setup. So it looks like we're really close to it, but we'll have to see what happens. So I think that's all I have though. Thank you so much for watching. Appreciate every one of you and for being a customer of mine. As the spreads trades start triggering, if you have questions on how they work, feel free to email me at richard@AlgorithmicTrading.net, and I'd be happy to explain more. You can also reach out to the brokers and they'll be able to explain as well. But thank you so much, and I hope you have a great day. Bye-bye.